Hey everyone, it's Ali Corman-Kintreve here with your option of the day. And earnings season is in full swing. We're getting a lot of earnings report this week, but the fun doesn't stop this week. There's more to come in the week ahead. And Ken, we're taking a closer look today at Uber, which is set to issue its earnings report on February 8th. And the stock is looking pretty strong heading into that report next week.
Yes, it is, and this is a stock that has responded pretty well to its last two earnings reports. We're going to be getting fourth quarter results from Uber next week, but positive response to second quarter earnings, a positive response to third quarter earnings when they gave pretty good guidance, and the numbers were pretty good in the third quarter. So expectations seem to be pretty high for another strong quarter here. The stock is showing relative strength, and on the weekly chart here, you can see this is just what's known as sort of a classic bottoming base. Uber is still about 20% off its 52-week high, but it's in this kind of just long sideways consolidation right up near the top. So because it's showing relative strength, we're thinking a call option might make sense in the market environment that's gotten a lot better too. We're in a confirmed uptrend, and market tide is definitely flowing positive here.
Right. So instead of buying Uber outright just ahead of the earnings report, because that could leave us vulnerable to getting shaken out of the stock if there's not a favorable reaction to the report, we can actually look to the options market at a long call. So that way our risk is limited to the premium we pay to buy a call option, Ken. So let's take a closer look at the expirations and the strike prices here at CBOE. So first, what expiration would we be looking at for Uber?
So the earnings date, like you said, is February 8th. So we can go out. Let's just go out to February 17th. That's Friday, February 17th. And with the stock trading around 33, we're going to look at this 33.50 strike price. What I like about Uber in the options market is that it's very liquid. Sometimes when you're looking at options, call options, put options, you see a very wide spread between the bid and the ask, but you can see Uber tends to trade pretty liquid in the options market. So that 33.50 strike price that expires February 17th, see the bid currently 163 and an ask of 170. So if you take the ask price of 170 and you divide by where Uber is trading right now, divided by share price of around 33 or so, it's going to give you a trade with about 5% downside risk. That's at the upper end, maybe a little higher than what we normally like to see. We did a lot of research showing that typically you want to keep that threshold at 4% or less. But I've been writing a lot about options over the years, and sometimes you get these premiums that might seem a little more expensive, but for one, the stock might tend to move a lot on earnings, which is why you get that higher premium. But I've seen plenty of winners, sometimes stocks that have 5%, 6% downside risk. So in this case, we'll let that 5% slide, and the call option at 33.50, paying $1.70. One contract, 100 shares. It's going to cost you $170 for the right to buy Uber at 33.50, and then you want to add that premium to the strike price, 33.50, and $1.70 thereabouts. What does that give you? 35.20. So the trade will be profitable if Uber can move above 35.20 after earnings.
All right. Well, we'll have to see if it has that positive reaction to the report. And I mean, with this stock being $33 to buy an option contract of $100 a share, is reasonable when you compare that to a lot of other really high-priced stocks that we take a look at. And as a reminder for everyone that this particular strategy is the rationale is this is a way to actually outright own the shares. That is our goal. That is our objective, to exercise the option if it does have that favorable reaction to the report. So we'll be keeping an eye to see if that is what we get. Ken, thanks so much for breaking down this trade today.
Oh, no problem. I think there are reasons to think that the numbers could be pretty good here. Again, the guidance that they gave when they reported third quarter earnings was strong. So investors will be looking at their EBITDA, that earnings before income, taxes, depreciation, amortization. It's just an alternate measure of profitability. So we'll hear that from Uber. They are bleeding a lot of red ink, but that revenue growth is there, and their freight business is doing well. Ride share, delivery, the numbers continue to be very strong here. So I wouldn't be surprised to see strong results.
Yeah, it's interesting because Uber is at that intersection of leisure and tech. In both areas, we are seeing deliver strong performances in the market right now as the rally picks up steam. So that is it for today's option trade. Make sure you check out investors.com/options for more and download IBD's new options trader app today from the Apple App Store for more option trade ideas, videos, options education, and more. You can go to the Apple App Store and search Options Trader IBD to download today. Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.